everyone. This is Dr. T. This is your girl, the legal and real estate prophet, helping you profit in real estate and beyond. And you know what we do at REO NYC. We always bring you the freshest information across the board. So today, I am so privileged to bring to you my friend, an expert in his field with over 30 years of investing and 20 years of teaching in the real estate investment space. We have no other than Andy Heller, a national recognized expert in REOs and lease options. You know, I be talking about lease options. You know, I talk about all the different ways that you can actually build wealth through real estate. And now we have an expert to prove me right. He has helped countless investors achieve financial success through his innovative strategies. And Andy, I am so excited to have you on not only this call, but also what's coming up in May. So thank you so much for being here.
Dr. Teresa, I don't know how to follow up with that. That's one of the best introductions I've ever done. I'm impressed with me, and I'm not arrogant. I love it.
So much for just being here, and I'm so excited. So, what I want to start off with is what inspired you to focus on REOs and lease options as an investment strategy?
You're gonna laugh at this. It's what inspired us, Teresa, is the absolute failure we were setting out to do what we originally went out to do. Like 35 years ago, everybody, my real estate partner and I went to some crazy seminar about how to make money by buying properties from distressed families right before the foreclosure sale and flipping them. Simple. It sounded great. It sounded so easy. In doing this, we subscribed to a list of properties going through pre-foreclosure. And Cliff Notes, the first two experiences were horrible. Didn't like visiting these families in a downward spiral. But in doing this model, you are subscribing to a list of pre-foreclosures. So one of these properties, instead of, I spoke to the distressed homeowner, sounded like there was a bit of equity. I just didn't want to go out and visit the house before the foreclosure. But for some crazy reason, I circled this property. Can't tell you why I did it, Teresa. Because on that list was the name of a smaller bank. So I waited till a couple days after the foreclosure sale. I guessed that it would go back to that bank. And I saw it was a conventional loan, so the bank could do whatever they want with the property. And I called the bank, spoke to the person in charge of selling the property. He'd hit a key out. I went to the property, presented an offer. 7 days later, we'd purchased our first property, bank owned, months before the property would pop up on MLS. No emotion, no distressed family, a simple business transaction. Now, on this first property, my plan, I was young and dumb and stupid. I lived in an apartment with a buddy. The deal I cut with my partner is we would move into the property for a month or so, fix it up, and put it on the market. And because I was making that property my primary residence, I brought a buddy of mine as a roommate. We covered our mortgage. So we figured we wouldn't have really any carrying cost. Now, I was a single guy, and this was 45 minutes away from anything remotely fun to do in Atlanta, Georgia. And 9 months later, we couldn't flip the property. And I'm like, I called my partners, Scott, I can't take this. You know, I'm a single guy. I'm out in suburbia. I don't yet have a wife. This is not my time to be here. And we can't flip the property. We just couldn't flip it. And the price was fair, everything, Teresa. So my partner heard about this thing called a lease option, but a lot of the ways that it was structured by most investors, he didn't like. And he's an attorney. We went to work on the terms and put it on the market. So let me just point out to you, here's a property that we couldn't sell for 9 months, and the asking price was fair. 3 weeks later, under lease purchase, I'm out of that home. And a few years later, the family bought the property and we got this massive cash windfall. So I said to Scott, I said, you know what? Why not? This was so easy. Let's just keep doing what we've been doing. Let's just order these pre-foreclosure lists, but not contact the families. Instead, we'll contact the lenders right after the foreclosure sale on properties that fit our model. And then instead of flipping them, or instead of dependent on flipping them, put it on the market for sale or lease option. So basically, we got into this because what we were trying to do simply was flawed, and this was so much easier. And ever since that first property, we focused on buying property. Let me explain. There's a window after a property is foreclosed on, everybody, before you see it on MLS. In most states, it's 4 to 6 months. We learned how to operate in that window. There's even a nickname for what we do. It's called a pocket listing. All right. Then once we purchase it, we wholesale, we flip, and if we can't get an immediate buyer, we're not going to discount. Forget it. We'll roll it into what we call a rent smart lease option. And that's become our model. And the last thing I'll say is that, if you've been working with Teresa or you've been studying real estate for a long time, there's dozens of different real estate strategies. One of the things that sets our strategy apart is a handful of years ago, Fortune magazine studied different real estate investing models and listed our model, the buy low, rent smart, sell high model, which I'm going to teach about in May, among the top 5 wealth building models for real estate investors. So don't take my word for it, ladies and gentlemen. Take Fortune's. And I can't wait to teach you guys in May.
And it's really exciting that what you said. And I think a lot of people really got to understand that you talked a lot about your flip, right? The different strategies, the wholesaling, all these things, and all the things that's wrapped up into one. And post-COVID, we know that a whole lot of things have changed and a whole lot of strategies have changed, and things that used to work back in the day is not working today. So why do you believe, Andy, that this is the right time for investors to consider these strategies?
Okay, I'm going to give you a very simple and honest answer. Our model works in every economy, everybody. Okay, we've been doing this for 34 years. There are always bank-owned properties to buy, even in robust economies, particularly if you already have a relationship with a particular bank or agent that gets bank-owned properties, and we teach how to nurture those relationships. So our model is probably amongst the most conservative of models you could learn, because you can always do it in any economy. That being said, there are peak buying opportunities when REOs spike. And if it's amazing if you study history. I could not be talking about this, everybody, 20 years ago, but now I'm older. All right. I've been investing for 34 years. And if it's amazing if you take a step back and you look at the US economy as it relates to real estate, there's a pattern. Let me walk you through this. In the 1980s, real estate values climb. In the late 80s, boop, there's a bubble burst with the savings and loan fiasco, and real estate prices plummet, REOs spike, bank-owned properties spike, and there's essentially, after that correction, a real estate sale for 2 or 3 years. Then we hit the 90s. Again, real estate values spike. In 99, we had the dot-com bubble burst, boop, followed by a fairly short recession. But again, there is a unique opportunity for 1 or 2 years to buy properties below market at crazy discounts when the real estate market reset. And most of those deals, once again, were bank-owned properties, REOs. Then we get the same thing happening in the 2000s. The real estate market spiked. We all know what happened in August of 2008. We have had the Great Recession, followed by a massive adjustment in values and a real estate sale that occurred all around the country that lasted 3 to 4 years, where you could buy properties at crazy discounts. And once again, most of the deals were bank-owned properties, also known as REOs. So what you're seeing if you study history, literally every 8 to 12 years, there's a real estate reset, values come down, and there's an opportunity to buy property at generational discounts. All right. Many of those who follow the economic trends and are a lot smarter than me feel that we were headed for one of these resets during COVID. But what happened in COVID, because of that horrible virus and crisis, governments around the world pump monies into their economies to keep them from imploding. In our country, that number was $7 trillion. And no matter how you feel about that, if it's too much, not enough, the right amount, whatever, when you pump that kind of money in an economy, whatever recessionary corrections were going to occur don't occur. It puts it down, pushes it down the road. In fact, values rise, which is exactly what has happened during the COVID period. All right. Also, the other thing that happened is around the country, most states implemented foreclosure moratoriums that push some of these foreclosures that are going to happen down the road. So most of those most of those, Teresa, who follow the real estate market, the real experts, believe we're headed for a reset. I will talk more in detail in May about the signs that suggest that we're going there. We are seeing those same signs. These resets don't just occur, everybody. There are what we call leading indicators, statistics that tell us they're coming. And if you look at these past resets, those indicators were popping up. The number one indicator is when there's a rise in people who get behind on their mortgages. We are already seeing that happen dramatically. So this is a sign that a reset is coming. So the reason why my topic is so sexy and the
we love sexy topics, Andy. We love sexy topics.
Okay. And the timing of my seminar in May is so perfect for all of you, is that when resets do happen, it follows a period of time where you could buy property below market at typically generational discounts. The Great Recession, some communities, investors were buying properties for 50 cents on the dollar. Most of those deals are bank owned. In fact, in the Great Recession, some communities, the percentage of sales that were bank owned were as much as 30, 40, or 50% in some months. That's unbelievable. Okay. And that's what I teach. Not only how to buy bank owned properties, but how to get them before they pop up on MLS and you're competing with homeowners. Now, what's the other thing that happens during recessionary times? Well, it's a bit harder to flip properties because you're in a recessionary time. There are fewer buyers out there. So the lease purchase is the perfect marketing tool for investors who buy these properties way below market, but they're okay to cash in on these properties 3 or 4 years later once the market recovers. So I don't teach one of these topics. I teach them both. And I wanted to come back to what I said earlier about our model being recommended by Fortune magazine. You know, I don't know this for certain, Teresa, just in complete clarity. You know, Fortune magazine didn't say, well, we are featuring your model for this reason. But I do know what they were impressed with. And if you look at most real estate strategies, the profit that we investors make is what I call outcome specific. What do I mean by that? The pure buy and flip investor who has no intention of landlording, their model, their profit is dependent upon meeting a buyer who will pay their price and shortly after marketing the property. But in a soft market, you can't account for that. And the buy and flip investors, the only tool that they have is to keep lowering the price until they find a buyer. At the other end of the spectrum is the buy and hold investor. The problem with the buy and hold investor is, you know, you really need to find those tenants that are going to stay 10 or 15 years so you don't have the turnover in your properties and you're always replacing carpet and repainting. Those types of tenants are not easy to come by in a pure buy and hold environment. So, in other words, both of these core strategies have fundamental flaws that the profit that you are hoping to make depends on an outcome that you can't control. With this model, we absolutely don't believe in that because I believe, and we teach, you've got to make sure you make money no matter the outcome. So with our model, we do flip some properties. We just don't have to flip. We work with wholesalers and teach them how to wholesale, but there's a backup in case they can't wholesale. We do lease purchase some properties that are sold in 3 years, and we get a lot of cash at the end of those 3 years. And we also lease purchase some properties that go into effectively long-term lease options, 10, 15, 20 years and more, that can basically pay for kids' colleges and retirements. So the beauty about what I'm saying in a roundabout way is that you will make money no matter what happens. The amount of money you're making will depend on the outcome that you can't control. And I believe that's one of the most powerful lessons that I teach new investors is whatever you do as an investor, make sure that you will make money no matter what curveballs the market throws you. And I think that is, I know that is built into our system and not a fundamental core part of other investment strategies.
Really, I'm excited. I was excited before, but now I'm really excited, and I'm excited for our members and anyone who's going to be attending the workshop in May. But what advice, before I let you go, what advice would you give to both new and experienced investors who are considering attending our May workshop, and why should they make it a priority to attend the workshop?
Well, the advice is simple. Get up early, have a cup of coffee, and be ready to learn. All right. My educational style is I love to teach. I'm a teacher. Okay. Yes, we do have intellectual property and a system, but I will show you how that works. And you can say, hey, this works for me. It doesn't work for me, whatever. Okay. Be ready to learn and get up early, and we're going to also have a lot of fun. Okay. In terms of why it's important, we kind of touched on this in the last segment, is that I believe, and many many economic experts who follow the real estate market believe we're headed for a real estate reset. In that case, the timing of this workshop is perfect, because you don't want to pick a system once the reset has happened. You want to be ready for the reset. And I'll give you a quick story that does a better job explaining this point than what I just did. I taught at another REIA without giving that name, and the REIA president, Teresa, scheduled me to speak in early 2008, and I spoke in October of 2008. The market, the economy was imploding. And this was actually at a conference. And there were other very respected speakers who'd been teaching for a lot longer than me. But I had this topic right after the market reset. What she said is that you were by far the most popular speaker at this conference. Your rooms were packed because everybody saw what was happening and they wanted to learn about REOs and lease options. Now, she had me back. When? A handful of months ago. And in her introduction, she said, Andy was the most popular speaker the last great real estate sale we had, but he was too late. All right? This time I want him in front of you before it happens so you guys can be ready. That's why May is so important, everybody, because we're not there yet. Real estate values in most parts of the country, they're pretty elevated, but we are seeing signs that there's going to be a slowdown and an adjustment in pricing. And when that happens, there are peak opportunities to buy. And who are the investors who are able to take advantage? Those that are ready before it happens. And so in your question, you said, why should new investors and seasoned investors and new investors alike, if you talk to real successful, wealthy real estate investors who've been investing, let's say for 3 or 4 decades, guaranteed they'll tell you one thing for sure, no matter what their strategy is. They don't buy their properties evenly, like 10 a year. No, they buy their properties primarily after resets. Why? Because that's when you get the best deal. So you take an investor who might buy 100 properties in 10 years, they'll buy 25 or 30 properties per year right after the resets and 2 or 3 per year afterwards. That's how successful investors do things. So my seminar in May, whether you are a newbie, you haven't bought your first property, whether you've been investing for a decade or two, you consider yourself seasoned, I'm going to talk about how to prepare yourself today. So if the market does what we think it's going to do, you're one of those investors who can buy 20, 30 properties a year and set yourself up for life. That's why this timing is so interesting. And actually, it's perfect. So I can't wait to teach. If you go online, you Google me, and as an educator, overall, you'll see very, very positive reviews. I like to teach. I enjoy it. And, I'm excited to be coming back to New York, even though it will be virtual.
Thank you so much, Andy. I really appreciate you. So, guys, join us for a day of learning, discovery with Andy Heller at our full day online workshop on Saturday, May 18th. Don't miss this opportunity, okay, to gain this valuable insights, these valuable strategies that can help you achieve financial success in real estate investing and beyond. Change your family tree. This is something where Andy had mentioned that instead of dealing with homeowners and the emotions that come with that, you're dealing directly with the banks in that window. Learn about the window of opportunity that you have, in the REO space, and how you can exit, even if you can't flip the property, what have you. These are some of the things that you are going to be learning at the workshop. We really want to have you there. We want to have you here before the reset happens so that you are ready, armed, and you are building. So thank you so much, Andy. Thank you guys for listening. I hope to see you in May at this Real Estate Sale of the Century workshop. We definitely want to have you in the space. Have a good one. Register below. See you in May.
Thank you.